Hey traders, welcome to a SMC episode that made you a consistent profitable in stocks, forex or currency. How you trade perfectly with inefficiency, breakup structure, order block and liquidity areas. Let's welcome to this episode. What is inefficiency? Inefficiency is the gap between three candles. Market makes higher than its previous high is called breakup structure. A valid breakup structure is considered if a candle closed above its previous high. But on the other hand, a candle swept its previous high is not a valid breakup structure. Same rule apply in downtrend also. A candle closed its previous low, it is called a valid breakup structure to downside. But swept, it is not a breakup structure. In uptrend, market makes higher high and higher high to the upside. But this is not a real market structure. Look at this real market structure to the upside. Same conditions apply in the downtrend also. Market makes lower low and lower low. But this structure is not real. Look at the real market structure to the downside. But in consolidation phase, market makes a state of confusion to both sides. Number 3. What is order block and what is its rule? And how we identify a valid order block. A perfect order block identification is crucial for a SMC trader because a wrong identification of order block is make you several financial losses. Look at this first type order block. Every candle makes higher than its previous high. Look at the high and the low of the top candle. No any candle sweep or close below the low. So it is not a valid order block. In the second type order block, every candle makes higher than its previous candle. Look at the top candle's high and the low. Candle closed below its low and also have a fair value gap. So it is considered a valid order block. In third type order block, look at this chart. Every candle makes higher than its previous high. In top, two candles make equal high. And a candle sweeps to the second equal high candle, so it is called a valid order block. Look at the fourth type order block chart. Every candle makes higher than its previous high. A candle sweeps another candle and grabs its low and also have a fair value gap, so it is called a valid order block to trade from this zone. A important point to note every traders, before use the strategy with the real money, any buy or sell, you should backtest at least 100 times to know its performance from past data. And also backtest result, you make a confident with this strategy to trade. Now we discuss the 4 types of liquidity zones, which is most important for price moves to upside or downside. First type liquidity, market makes higher high to the upside and make a liquidity zone above the high and market moves from the unmitigated order block zone. Look at the second type liquidity, market makes higher high to the upside and make a double top liquidity mitigate to the unmitigated order block and moves from here. In third type liquidity, market makes higher high to the upside, make a trendline liquidity above the unmitigated order block and moves from here. In fourth type liquidity, market makes higher high to the upside and take the inducement liquidity and moves. Look at the real chart example how we identify the POI and trade from the perfect zone. Market makes higher high to the upside and make BOS and take the liquidity zone of here and also make engulfing candle above the liquidity zone and hit the target of recent high. Look at the double top liquidity chart. Market make lower low to the downside and make BOS to the downside also. Here market make double top and also fair value gap located at here. Market mitigate the order block and move to the downside and hit the target. Look at the another type of liquidity chart. Market makes lower low to the downside and make BOS to the downside also. A trend line located at here and also a fair value gap here. Market mitigate the order block and moves to the downside and hit the target also. These are the high probability liquidity zone. If you place a trade, it gives you high risk reward with the high winning trades.